Happy Friday, everybody. Amanda and I wanted to follow up on some pieces we've done and talk about a question that we're getting from clients, which is, should I just sell everything and go to cash? This can be an incredibly appealing strategy when there is volatility and when there is uncertainty. What we have to do is we have to depart from the, is it black or is it white? Are we on or are we off? And look at a bigger picture for your situation. Take, for example, a younger couple, young kids. They're in their prime earning years. They're putting away money into 401ks. Maybe they have some to put into IRAs. Maybe they're even able to put some money into a brokerage account. These people's income can be used to weather short-term storms. So in that case, we don't need to think about going to cash. We need to make sure that we're sitting and looking at the portfolio. It's appropriate to their willingness and ability to take risk, and that we're rebalancing, right? Rebalancing allows us to sell high and buy low, sell what's appreciating, buy what's depreciating, so that we're in essence, what we're doing is that we're taking advantage of things that are priced high and we're buying things on sale. And that's going to be true regardless. So let's take a couple that is closer to retirement or is in retirement. Okay, for these folks, there's going to be an investment portfolio. We're going to need to make money because people aren't dying at 75. There's a longer lifespan. And so we do need to have money to overcome the fact that there's more longevity. However, at the same time, we're going to want to have some stable cash, right? Whether that stable cash comes from a pension, whether it comes from dividends, interest income paying to cash, or just a cash reserve that has been set aside, this is going to be a really important piece of the strategy. So should you go all to cash? Absolutely not. What you need to do is look at your situation and determine what you are going to need cash for. And if that cash need is both immediate, and here we're talking next 6 months or so as immediate, and you don't have the benefit of ongoing income from a work or from a really good pension, then yes, some cash should be put aside and we can think about how do we build that up. Do we sell bonds, right? Because those are not going to be as volatile, will have not gone down like stocks. Do we have dividends and interest income paying out to cash? We're going to build up that cash reserve. But thinking about your strategy in buckets is going to be really, really helpful mentally as things get wild and uncertain, because you're going to know that your bucket, your safe bucket, is there as a store of spending while we're not as concerned with the day-to-day up and downs of your more aggressive buckets that are going to help you spend in the future down the line. So please reach out to us with questions. If you have questions, write or call. We'd be happy to feature them on one of these segments. Have a great rest of the week. Take care.